Greetings, everyone, colleagues, participants from around the world. I'm Ziad Alexandre Hayek, the president of WAP, and it's my pleasure to extend a warm welcome to each of you as we convene the 14th session in our continuing series on small-scale public-private partnerships. As we gather once again, our unwavering commitment to harnessing small-scale PPPs as a means to advance the UN Sustainable Development Goals continues to drive our discussions. From our initial sessions that laid the groundwork for understanding small-scale PPPs, we have progressively tackled challenges, devised potential solutions, examined case studies, and explored sector-specific topics. Through comprehensive dialogue and shared experiences, we have evaluated the effectiveness of various strategies. Our last session brought us insights into the healthcare sector's involvement in these partnerships. Today, we turn our focus to a critical aspect, exploring the ways in which banks can actively participate in small-scale PPPs. To provide a deeper exploration of this topic, I am happy to hand over the floor to our distinguished moderator, Dr. Ayoub Vural-Aydin, who will guide us through the session and offer a detailed introduction. Before I give a short introduction of Ayoub, let me just say that we are conducting these sessions in partnership with the UN Economic Commission for Europe, UNECE, and that the results of these discussions will be used to form guidelines which will be published by WAP and UNECE later on this year. These guidelines will form the basis of international understanding of small-scale PPPs. Ayoub is an experienced PPP expert with more than 20 years of experience in infrastructure industry on both public and private sector sides. He is the head of the Eastern Europe and Central Asia chapter of WAP. He specializes in PPP structuring, models, and procurement strategy, and has worked on various PPP projects in Turkey. He has provided advisory services to many different government bodies in Turkey and abroad. Ayoub has also served on multiple assignments as senior PPP advisor to multilateral development banks and public sector authorities, including the World Bank, IFC, EBRD, Islamic Development Bank, Turkish Ministry of Environment, etc. Additionally, Ayoub has an extensive experience in PPP project preparation, project development, transactions, and training. He's the chairperson of the Istanbul PPP Center of Excellence, the chairman of the DAKE PPP Committee, and the chairperson of PPP Research Center. Most importantly, from our perspective at WAP, Ayoub chairs one of the most important yearly conferences on PPP, the Istanbul PPP Week. We are delighted always to be cooperating with Ayoub and his center. And Ayoub, I hand it over to you to moderate this panel today.
Yeah, thank you. Thank you very much, Ziad, for your kind words and very clear, very clean introduction. So, hello, everyone. Today, this is very exciting topic we have. It is I think it's the 14th small-scale webinar series. And I am really happy to have this privilege to moderate this session. And as always, today we have excellent speakers and distinguished panelists. And I will start with Doris for the positive, discrimination to you, Doris. And Doris she's an independent board member of Aéroport de Paris International, the independent observer representing private sector at the Bureau of PPP UNECE in Geneva, and independent member of the EDRAM investment committees. She has over 30 years experience in financing infrastructure and renewable energy projects. She is an expert in the field of infrastructure financing and in particular rail PPPs. She has to her credit and experience or more than 70 projects worldwide, representing more than 20 billion euros of financing. Welcome, Doris, today.
More than happy to be
joining. Thank you for joining. And next we have engineer Nayef El Haddad. chair of MENA chapter of the World Association of PPP Units and Professionals. He has more than 20 years of experience in the energy sector, working for Kuwait Minister of Electricity and Water, GCC Interconnection Authority, and Kuwait Authority for Partnership Projects, CAP. He is currently the manager of research and strategic planning at CAP and has managed multiple local IVPP projects and power trading deals between GCC countries. And welcome, Naif, as always. Thank you very much for joining us today.
Thank you, Ayub. And I would also we'd like to congratulate you on the Center accreditation, just a recent accreditation for the Center of Excellence. That's very good news. And also for being a board member. And I'm honored to be in the presence of you, Ziad, getting this opportunity as Doris as well. Thank you very much.
Yeah. And now I think for this webinar, this is the difficult part of me because I would like to introduce our President Ziad. So I don't know how much time I need.
No, keep it short, just one part.
Very, very short. And, as you know very well, our dear President Ziad Alexander Hayek, he has 44 years of experience in investment banking, which is very important for today for us to understand what is going on in investment banking for infrastructure and PPP, particularly corporate strategy, technology, public policy, and public-private partnership. Alexander, he is currently the head of Global Alliance at Hypercycle AI, which is also very important from the AI and the technology and the infrastructure, and the co-founder of Earth 64. Previously, he was vice chair of the UN Working Party on PPP, Secretary General of Lebanese High Council of Privatization and PPP. He has been member of the boards of the multiple companies, banks, universities, NGOs, and tech startups. And we are very lucky now he is driving our leadership as a president of WAP. And welcome also Ziad today. And so, today we would like to discuss maybe the most important point of infrastructure project, especially for PPP, the roles of banks for the small scale PPP projects, how we can finance the projects. As a PPP expert, always we can do excellent things for the preparation of the projects. But if we cannot find the proper finance of our projects, we cannot go to the end of our implementation process. So the banks are very important. I would like to ask the first question. I think the most significant word is bankability of our projects. So for small scale projects, the bankability issues is very important. So how we can reach the proper bankability for our small scale projects and the roles of banks, how can be effective to reach the proper bankability issues. So the challenges, the advantages, maybe the new products, what we can do, how we can work with the financial institutions to reach this bankability for small scale projects. So if you allow me, I would like to start with Ziad for the first bankability issues because he is a former and actually current investment banker. So the bankability, what is this bankability? And when it comes to the small scale projects, is it worth to talk bankability, Ziad?
Thank you very much, Ayub. Look, in my opinion, bankability of the project is a given, is indispensable, whether you're talking about a large-scale project or a small-scale project. So it is not what it is not that a small-scale project has different elements of bankability than a large-scale project. They're just more details, different levels of due diligence, different levels of financial analysis, perhaps, etc. But whether it's a large project or a small project, the project has to be bankable, i.e., acceptable to financial institutions from the perspective of whether it can be self-sustaining, it can repay its debt obligations. Of course, from an investor's perspective, not banks, but it has to have some return on equity. But if a project is able to service its debt obligations, then it is considered to be bankable. the issue for small-scale PPPs goes beyond that. It ends up involving many other aspects that are more, how should I say, related to all kinds of things, whether it is the potential for like the governance of the project. Is there sufficient confidence in the local authorities' ability to also commit to its obligations to the project so that the project is viable. It has to do with many other aspects which we will discuss during this session today.
Thank you, Ziad. I think the viability of the project is very important, as you mentioned. So I would like to give the floor to Doris from a private perspective.
Yeah. Thank you very much, Eyüp. I would go the same direction as Syed. I mean, you know that in big PPP projects, we have a motto which is too big to fail, and that applies to the banks. I mean, because they are very big projects, people, and namely lenders, even investors, they got the feeling that if something goes wrong, it's so big that it will go directly to the newspaper, and all the ministers will come and make it the right way so that everyone is happy. In small scales PPP, it's somehow the contrary. It's too small to survive, and that's the risk of the lenders. I mean, their concern is that the project is not robust enough. So this is really an issue. And the second point is that you do not have the same lenders partners on big projects and on small projects. On big projects, you attract the big names, the big ones, the big fish, who have teams really skilled in PPPs. They have done many, they know how it works, and you go directly to the point. When you switch to small scales PPP, and here we're talking about project below 50 million euros equivalent, that's an average, because if you go to some African country with 50 million euros project, it's just a big one. So small scales PPP are usually more 10 million euro, thing like that. It's very difficult to attract lenders. I've done many small scales and many big ones. It's far more difficult to raise the financing for a small scale rather than for a big project. And this is quite surprising, because small scale PPP have got a far more impact on the economy. They are far more easy to replicate. So we've got this kind of antinomy between the difficulty of raising projects which are more impacting the economy but less attractive for the lenders, because we will see why in the future. Maybe we've got some time during this webinar to explain why. I mean, there is this difficulty within lenders. Is it a team issue only? Is the profitability issue globally? Is it a skill issue? I mean, we will discuss that. I leave the floor to my colleagues, and I think that we'll come back with the next questions.
Thank you, Doris. Naif, I would like to ask you. I know now you're currently.
Before you ask, I would like to. I think Doris was with me in the same room talking to the banks. Because like this is exactly, I mean, I salute you for like saying all these concerns, because this is the reality. What she said is exactly the reality. I mean, like, because see, among like mega infrastructure projects, the losses or like maybe the problems could be just, kind of mitigated or like kind of, I would say like dispersed. But in talk about like, you got to treat like small scale projects like small SMEs, the small and medium businesses, where like the exposure is high, the market demand, and some of them, the projects are like, I would say volatile to like market demand. And the banks, I've been like, I don't know if like somebody's attending from the financial lenders. The last month or so, I've been meeting with like 16 lenders, local lenders, even international ones. They have a lot of concerns. And we talk about like, when you talk about like small scale, imagine, I'm talking about like even small scale projects, which could look like, I don't know if you heard like about slaughterhouses. You talk about like, community centers. You talk about like public libraries, etc. Things which relate to the community. And the lenders have no appetite for this because you got to talk about like market demand. You talk about like previous experience in dealing with the state regarding these projects, because the projects, they don't get the kind of significant political impact and attention to as like, for example, a slaughterhouse. That's why, there's a lot of concern from the financial institutions. And thank you, Doris, for like raising that up.
Yes, it's a very solid insight. So, but Naif, also I would like to ask you as a public servant now, the bankability, the responsibility of bankability to make a project is the public side. So how the banks can help, as you mentioned, for example, we have some lack of private partners to the projects. How banks can bring in some added value to make a project bankable?
So you look at this way, when you first start asking the question, I knew you were like acting as a government official. How do we make like engage, the financial lender? This is what anybody working at the public sector PPP would be asking themselves. How do we get the lenders involved in this kind of projects? Because during the feasibility study, you got to be doing market testing. You got to look at because in the end, it's an investment opportunity. And if there's no investors, there's no project at all. That's the main concept of doing PPPs, right? So the thing about it falls upon the burden of the state to look at where the banks, where the market is going and their interest, and align it as well. You got to reach a point of a win-win situation where the banks are getting, of course, the financial gain. They're getting to have, I would say, kind of relevance to the local community, showing as this project. And I'm not saying, again, this is not CSR. No, this is project finance, but the banks has to be relating to the local community, seeing how the impact. And there's one thing we have always to remember this, Ayub. And the first time I heard it from you in Istanbul PPP Week, the value for people. We gotta demonstrate these projects that has to have a value for people. So you gotta have because see, that's the kind of thing. The small scale has to relate to the community, and see the kind of thing is it has to, the banks and the lenders has to showcase where to the local community through their contribution, making this kind of, I would say, engagement and involvement in where it would hit the target of the state in getting this project and service delivered. B, engaging the private sector, and for the lenders themselves getting financial gain, as well as gaining a bubble acceptance for engaging in. Now the thing is about it is that there is a similar burden where when we doing, say, for example, when sharing with the risk and the responsibilities for doing for example, a power station, and for example, a community center. But then for the community center, it has to be microscopic according to the impact and the demographic and the location of this kind of project and how it relates to the surroundings of this project.
Thank you, Naif. I think we reached two very important points. The first one is the risk. All you are talking about the risks. There are some projects risks, there are financial risks, and so the second one is, I think, the social infrastructure, as you mentioned, some impact of the projects. As always, we discuss with Ziad, we split the projects, commercial and social projects, and if social projects, has an impact on the society, why we are going to the PPP? So why the government doesn't involve the social projects rather than public, procurement to the PPP project? So I would like to start with Doris. It's very important to mitigate the risks and to get more outputs from the social perspective. So how can bank, play a role in this picture? But I would like to ask you, Doris, for the first question, it was very, very clear defining the problems. Do you have some very solid and understandable recommendations for the audience?
Oh, yeah. I mean, for small PPP, because you do not have the same lenders, same skilled lenders, and that you are either experiencing small local banks or national banks with little knowledge of PPP. There are for me three things that you need to do. The first one is make the documentation easy to read. Do not go too legal, too complex wording and so on. Make it easy so that anyone understand what we're talking about and what are the commitments? Because those guys, they are not living PPPs, it's just maybe the PPP of their life. So they need to understand it is not the same way of doing business, because you are basing the financing on future virtual revenues and lending to an SPV company that has no financial history and no balance sheet. That's a big difference for the guys. So make things easy to read. The second one is focus on key matters. That's basically are revenues enough to cover costs. Because in small scale PPP, you've got small actors, and the small actors, they cannot bring the same big level of warranties or surety as the big players. I mean, because they are SMEs, because they are small companies, and because as a grantor, as a public authority, you do not want to kill small companies and SMEs, because they are the first one contributing to employment and contributing to fiscality of the area. So you need to protect them, and they have not the same robustness than the others. So in big PPPs, for instance, you can ask for a global performance cap on liability to 50% or 100% of the contract cost. This is totally, utterly impossible in a small scale PPP. You got to trust the guys that are doing technically the projects. So coming back to what we said before, the project itself has got to be very robust before you put it on financing. And last point I would say is make it flexible. Try not to have a contract in which everything is predicted. It's better to have a dispute board. It's better to have rendezvous clause. It's better to have a performance committee and a management committee. So it means recording, remembering, not changing the team at any times, and so on. But it's much better than having a contract of 500 pages that nobody will read.
Yeah, thank you, Doris. So I would like to move to Ziad. It's very important. You are talking about the documentation, you are talking about the easy of the process, and you are talking about the flexibility. Which of three of, I think, increase the risks appetite of the banks? And so I would like to ask you, Ziad, how we can mitigate all those three very solid recommendations and mitigation the risk for the small scale PPP projects.
Look, let me take a step back before I answer your question, if I may, so that we clarify more what are the issues that are faced with small scale PPPs, and then we can talk more about solutions. Small scale PPPs suffer from perception that there's additional risks, and we've talked about them. They suffer from, because of lack of experience, perhaps, of local authorities or the people that are trying to put these projects together. They suffer from some, let's say, aspects of the project structure that are not immediately like the banks are not really very happy about, let's say. There's the availability of collateral that sometimes is not there, especially if it's a social service. So for example, if you have a street lighting project, what is the collateral there? Is like the street lamps. I mean, so there's issues like this. There's uncertainty about the revenue streams, and I mentioned it earlier. Is the local municipality, for example, going to be able to commit to the payments that it has said it will make available to the project, so that the project or the SPV can pay the debt it owes to the banks? The creditworthiness of the sponsors. We said that these are, perhaps they might be smaller companies that are involved. So if the project is at risk, will the sponsors be able to come in and inject more liquidity or not? There is the financing structures. So in larger projects, you may have a lot of large teams of investment bankers or bankers in general that are coming up with very sophisticated structures. They test them. They have term sheets that can be, dozens of pages long, not to say hundreds of pages long, that have taken care of covering all aspects of the financing risks of the project. In a small scale project, you may not have that detail. So there's, you're using basic financial structures that may not have all kinds of protections within them. There's the issue of access to capital markets. So the banks, they may be willing to normally lend to a project, but they would like to be taken out in a project by the capital markets. Maybe, after the banks have financed the projects through the construction phase, they may want to come in and, be able to sell bonds or have somebody or syndicate the loans or refinance with a larger syndication at some point in time and take the loan off their books. Small projects, they're very difficult to take off the books and maybe sometimes difficult to syndicate to other banks. There's the issue of government support and multilateral development bank support. So the multilateral development banks are interested in large projects. They come in and they put resources there. They may offer guarantees through the likes of MIGA and others and whatever. These guarantees are typically not available from the MDBs for small-scale projects. And finally, I would say that there is the issue of the sector focus. So banks are typically focused towards certain sectors that they can feel comfortable with in financing infrastructure. Maybe depending on what the flavor of the year is or flavor of the era. For example, maybe banks are gaining more and more exposure to solar power projects nowadays. They're starting to understand solar power projects, and usually there's a take or pay or some other type of power purchase agreement that gives them comfort. But what Naif was talking about, for example, a slaughterhouse, they may not be as comfortable with that because that model is not there. So it depends on the sector. Interlocutors, who do banks have as interlocutors with the in a local government that may not have the sophisticated knowledge of PPP, talking the language of investors and language of bankers. So these are the issues. They're really large issues. They're very complex. And this is why this program that we have is so important. And I feel that, we need more discussions on the financing aspects and the banking aspects than we have allotted time for, because in this program, we sort of divided it in sections. And, today we're supposed to have a session on elderly care, which instead of that, we decided to have this session. But I think maybe even more than sectors, these discussions are important that we're having. I spoke for too long. I will stop, but we'll come back and talk about what can be done about these things.
Thank you, Ziad.
Yeah,
Very
but let me just add to one thing.
Yes,
to
it's your turn.
what Ziad said. Exactly. I mean, like when we told them about like strip malls, when we talked about like community centers, they're interested in like projects that give them green credit for like their reputation and corporate international I would say image. So when we spoke to them, so like, hey, there's like this opportunity for community center. Actually, I'm working on right now, like establishing a study for like elderly care center. They don't get that kind of appeal as much as saying like a renewable energy project or like a waste management project, because it doesn't bring any kind of green reputation to them as like as their commitments or like their targets.
Yeah, thank you. Ziad, you mentioned very important point. I think you are talking about some MDB's involvement to the projects, not the small scales. And I think I have some notes before the meeting. I was reading some research before the webinar, some numbers. I would like to give two data. The first one is now all around the world we have 60% user pay, government pay PPP projects. It means the government pays. And the second data, I think, which is very important as well. Now it was actually last 5 years, including last 5 years data, but 60% of all PPP projects comes from the private debt. So still we have 40% from the public side. So I think we should increase this 60% to maybe 75% to private finance to all projects, not small scale or large, but all projects. So I think we have a problem of partnership with banks or financial institutions, as you mentioned, how the banks, the commercial banks can work with the MDBs or financial associations to make better PPP projects, particularly in small scales. So I would like to give at this point, Doris, the floor to you. What do you think about it? How do you see the solutions, the partnership, the collaboration between commercials and the MDBs?
Yeah, I think that the solution needs to come from both sides. I mean, from the upper side and from downside. From downside, we've seen that basically the banks need to accept that they will make money via volume and not by rare projects. And this is going to be new. I mean, a small scale PPP, it's just like a little bit like a retail banking. And when you're a bank, you're making money because you do a lot of those small scale PPP. So it is our duty to make those projects replicable so they can make money and basically amortize the cost of their own teams on a lot of projects and not on only one. So this will come over time. I'm not very concerned about that. But the other point is that they need to have clients. And this is the part which is not obvious, because public authorities, and namely when it comes to local authorities, they are scrutinized on what they are doing with public money. If you go to a city mayor, he's penally responsible of what he's doing with the public money, meaning that if he goes wrong, he will go to jail. So they are very concerned. And also accounting-wise, I mean, this PPP debt nowadays still is on the burden of the balance sheet of the public authorities, which is an issue. And that's what I mean at the upper side. We should have an action, and we need to discuss that with UNICE and so on, that these debts for infrastructure that are following the SDG principle, and when PPP projects are performed and can be monitored to check this performance alongside the duration of the project, our project bringing a good debt, and this good debt should be off balance sheet of those authorities, because they are bringing a huge impact on the economy and the local development. And then if we had that, we would obviously have more authorities going for financing, because for the time being, what prevents them of borrowing money is the fact that they will have the PPP on their own account. So development can wait. I mean, they will just use their own finance for renovation or urgencies, but they will not invest in development. So if we want the lenders to be more used, we need also to ease the use of borrowing money.
Yeah, I would like to ask a question to Ziad, and maybe you can continue where you ended up, and regarding the collaboration and partnership between the IFIs, MDBs, and banks. But these webinars are recorded, and also we will use the inputs as our UNEC joint paper for all those inputs. So those are very important, that what you are sharing with us. So that also I would like to ask, for a long-term finance by the banks, what are the most important factors for ECG alignment, for the projects, sustainability issues, and the social impacts from the banks? And what are the really solid criteria that the banks will bring to the game?
Well, if you look at small-scale PPPs, they are typically born out of the needs of a community. They're typically not large national projects. They don't involve things like we're going to, through this project, change the economy of the country. They're more focused on a community. And because they're focused generally on a community and their local government type projects, there's usually already de facto support for them from the community. So because typically it's something that has been promised in some election, or it benefits the local authorities to do, etc. And we know that their social, especially social infrastructure, is not usually controversial. What might be controversial is why did was the tendering process transparent or not, and you gave it to this company or that company. That might be controversial, but the project itself is not. So there isn't, in many ways, and because these are smaller projects, so I talked about some of the difficulties that are faced. I'd like to talk about some of the positive aspects, let's say. So not only is there usually support, not only these things are usually not only socially but environmentally desired, such as street lighting that might be solar powered, for example, or that might prevent crime or reduce crime in an area or whatever. But also the projects are simpler to analyze. It is not like a bank does not need to spend a lot of resources and hours to understand these projects. They're straightforward. This is the cost of the project. This is how the money is going to come in, and these are some of the risks. The problem is I caution against us all exaggerating the risk profile of the projects. The problem is not so much the risk profile as it is the bank's willingness to spend the time to analyze the risks and to analyze the project. And because any banker will tell you, it will take me as long to work on a project that has 7 zeros in it as it takes for a project that has 4 zeros or 5 zeros. So the larger where do I want to commit my time? Do I want to commit it on a small thing or not? And here is where what Doris was saying is very important, is we need, as members of the PPP community and as members and as local authorities, working with local authorities, to push for the implementation of programs rather than projects. As long as we are talking about a project, the bank is going to find it too small to want to spend time on. But once it's a program, once there is standard documentation, once the risk profile has been studied many, many times and analyzed, and we will find banks. Not all banks are big. Big banks want large projects, but there are many small banks that see it as an opportunity, actually. They see it as an opportunity to get involved in a new business for them, a new line of business that in many ways could diversify them away from, let's say, lending for SMEs, lending for infrastructure that might be a bit more solid with some government guarantees, even if it's local government guarantees. Also, these risks can be mitigated with not only with diversification, but also, something that we have been pushing for at WAP, as you know. We've been trying to see if we can get the investor community to help us set up a fund for small-scale PPPs. But related to that is government support through government funds. So we have been lobbying for governments to set up funds to shore up small-scale PPP programs in their country. Especially that this is money well spent. It is money that's typically going to SMEs, but not only going to SMEs to end up in the entrepreneur's pocket, it's going to SMEs to end up serving the community.
You're very right. I think that you and Doris are very right regarding the programs and the projects. You know, I am also working in different parts of the world, in Central Asia, in Eastern Balkan, MENA, in Africa. Without a program or pipeline, you know, you are wasting time, you know, years and years trying to develop a projects, and you are not ended up with a successful projects. So this is very important. This is
turn the tables a little bit on you, Ayub, because having you with us, we would be remiss if we don't take advantage of your expertise as well and your experience. Maybe you tell us a little bit about your thoughts on this subject, especially from your experience in Turkey, Central Asia, other places.
Thank you. But you know, sometimes it's time to talk, but now I think time to listen. So I am very happy to learn from your experience. But also, I like what you. I think it was the first time in Tunisia you mentioned very important things with implementing 2 or 3 projects in a year. You cannot reach SDGs. So this is very important. I think it was the last year in Tunisia we were together. So I like this statement. We need small scale projects for SDGs. Today SDG means finance. So you know the MDBs, financial. But another thing I would like to ask a question to Naya from your words, which is very important for me. It's capital markets and the small banks. So also I would like to add capital markets, small banks, and now you have private funds and family funds that are very popular in your region. You know, sometimes tens of people is, you know, gathering and they are establishing a fund. So they would like to look for some investment areas and opportunities. So how we can, this is very important, how we can use capital markets, family funds, private funds, equity funds, for developing or also working with some local banks. What do you think about how we can, you know, craft a well-structured position for this?
Let me tell you, like, you know, like we guys like talking, I remembered like a funny story just happened recently. So we have this like seaside strip mall, just like the picture almost like behind like Ziad's background. I think that's Limassol, right?
Yes,
We had something similar like to that, and it needed renovation. And instead of tendering this as a concession or a PPP project, one of the local banks came and made a donation to renovate the whole beach instead of going into a contract. And that says a message. We'll give you the money. Just we don't want to get into that kind of relationship where, like, you know, especially when it comes to the incumbency of the public entities, you know, because it's not worth like to get into trouble over like a small project with an incompetent, you know, public entity. So like they're better off like in donating some, and that doesn't hold like we're trying to do. What we're trying to do and get them to be engaged into these kind of contractual agreements, actually to be a partnership. Now, when you talk about like funds, I've been trying to launch like social infrastructure projects since like 2017. Actually, I came across multiple projects. You know, we talk about like museums. I swear to God, like we had like 1 or 2 projects with like actually they were like museums for like school children. Okay, and one of the big challenges is the state. And I know Ziad know this, and you guys even Doris, like whatsoever. A lot of government officials think that PPPs could sustain themselves. Think that PPPs, you know, could generate money. No, it doesn't generate money. It's either like actually dealing with the market demand or getting like, you know, paid off by capacity availability payments from the state. So the people who are like, you know, the public entity thought that the museum could sustain itself. And I was like, through like, I would say like maybe selling souvenirs whatsoever. And I was like, no, that's not the case.
Well, it depends, because I've structured the PPPs for cultural project and museum and so on. But you've got to structure
fund for it. You need a fund. You gotta like I would say, because see, Doris, the public entity didn't know about the cost of these artifacts, about the maintenance cost, the insurance, the cost for it, and they thought like somebody just managing the place, building a museum and managing it and selling souvenirs could get like, I would say, break even and get benefit. I was like, no, that's
Yeah,
just
yeah, yeah.
that's
Sometimes,
selling tickets, you know?
sometimes you got to recall that you're doing finance and not miracles.
Yes.
And
So the thing about it like that, the state had to have the fund, and then the problem comes with, you know, you answering question, the alignment of the state priorities. Is the state is willing to align its priorities to, like, I would say, like, for example, mega infrastructure, large infrastructure, social fund, cultural fund, etc. And that's what like the local private sector or like international even you know private sector wants to see. If there's a dedicated fund for this, if there's like people who's willing to do so. And the thing about it like this, for example, and look at this way. Usually for like utilities, state line utilities, we talk about like, you know, for example, energy service provider, telecom, whatsoever, they're more used to dealing with, you know, larger, you know, obviously larger contracts whatsoever. But when it comes to like smaller line securities, like social services, you know, we talk about like, you know, education whatsoever, it falls down to that kind of complication. So when you talk about like dragging them into a PPP agreement, and setting up like some kind of like, you know, like Ziad said, like dozens or hundreds of term sheets, you know, this is like the way you're testing the water with the real competency of these people. And that's like, you know what, like, you know, the lenders, even like small lenders, if they don't feel the comfort from the other counterparty, they're not gonna go forward. And that's why, like, you know, you need sometimes state guarantees, like, you know, for example, you know, this kind of funds where like the state is contributing to it.
I would say it depends which banker you've got. If you got usual bankers used to PPPs or large banks are used to retail banking, I mean, you need at least to got kind of standby letters of guarantees to reinsure them or MTB's guarantees covering the risk of the public authority so that they feel somehow comfortable. But what I've experienced is to switch to other form of lenders and going even more private. Because if you go more private, you're also switching to local private finance. And as you were saying, I mean, you're finding family offices that are fully embedded in an area and they like the area, they want it to be alive and wealthy and fun, and they are happy to invest in those projects. You find also institutions just like private funds, private debt. It's a little bit more expensive than commercial banks, that's true, but they are far more flexible. And because they are more private, they are used to invest in their portfolios in various topics. So they are open-minded and they are happy to consider the project, and they are going immediately to the fundamentals. Who is doing the project? Do they know their job? What are their references? Who is the team? And is the community really interested in the project, and is the community by the end of the road prepared to pay for the project? And you go faster with those new guys coming to this kind of PPP rather than if you're trying to work. I mean, I had a case with some national banks that are structured and are there to support the local development, but by the end of the road, you go nowhere. You keep discussing for ages, and nothing happened.
I have a question. I have a question to Ziad, but before jump to Ziad, Doris, I want to ask you, because you know, when you look at the European countries, mostly actually we should focus on the emerging countries for small scales, not the developed one. But in France, you know, you are become different than the other European countries, that you have lots of arrondissements projects. So you have a lot of PPP projects, small PPP projects, which ruled, governed, managed by the arrondissement. So how can happen in France? So what is the difference from, for example, UK model and the French model, that the government of France and the arrondissements focused on those small scales, and how they can make it possible?
Wow. Because we are French. No. This being said, it's a really different way of structuring the project, because the power of the local authorities is quite separate from the national government in France, and so the way we elect the representative of people is different, and so they locally speaking, they are expected to take maybe more actions. So there is more pressure on the public side, on the local authority side. And so also because we've got a very strong national bank, which first duty is local authority before big national plans. So they are really embedded in the local economic footprint. And they are very supportive to develop the project. We have two saving banks that are really very active. And then, I don't know, maybe it is because I don't know why it works really well.
Maybe another series, the topical series, as Ziad mentioned. But I think what you started as a quick response to what I will ask to Ziad. Thank you. So because mostly, as Ziad mentioned, what is my experience from emerging markets, the biggest problem is the local currency issues, because the large projects, all those countries need foreign currency, which ended up with the indexation. So, and the society start to criticize why we are, make an indexation to our payment to the lenders. So I think this is the biggest problem. And what you started.
You got two issues, that the continuity of the public commitment over time and the duration of the PPP, so that it's long enough to be affordable by the local communities. And I will pass it to Ziad on those two ones, because that's really politics.
That's a real challenge.
And I would like to ask this local, it's very important, capital market, local currency, so, which I like. It's small banks, not the focus on. So yes, Ziad, what do you want to say?
I think to follow up on your question to Doris and the currency, I think there are two things here that are, three things, I should say, three major elements governing societies that play an important role. First, the structure of government. Do local authorities have independence in their budgets, or don't they? What is the level, basically, of decentralization of the government? The second is the banking sector. What is the profile of the banking sector in the country? Is it centralized banking sector, or do banks, even if they're large, either there are many banks, local banks, savings and loans, that can play a role locally, or they might be large banks but have given a lot of autonomy and delegated a lot of authority to their local branches, or not, or they have centralized everything. So the more centralized it is, the more difficult for them to attend to small-scale PPPs in the regions, etc. So the structure of government, the structure of the banking sector, and then the structure of the business sector. Are there a lot of small-scale PPPs? Small-scale, small and medium enterprises. Are they mostly, is the country's business environment mostly mom and pop shops, or are there some companies that have medium size, that can undertake projects at a scale, not just local, but multiple local? So, construction companies that have a certain level of development, etc. And is the economy free economy, or is it a controlled economy? So these elements will all play a role, and this is why, anybody, listening to us or thinking about how to deal with the situation in their own country, they have to look not just at the general global experience, although it can have some elements of inspiration, let's say, but they need to look at markets that are similar to theirs in the government structure, in the banking structure, in the business structure. Some countries like Turkey, for example, and Brazil, and allow me to send greetings to Silvio Lemertz, who is regular here with us in our audience from Brazil. Silvio had suggested that we bring on board for today's webinar, for today's discussion session, some of the experts that he knows in Brazil. Unfortunately, it was too late to invite them, but we need to have another session and we'll invite them because Brazil has an amazing experience in small-scale PPPs, and interestingly, it tends to be sort of the middle of the average. It's not a communist country. It is not fully centralized. It is dynamic, and Turkey has some of these aspects as well. That's why I was encouraging you to give us the benefit of some of your experience. Maybe we have to do it in another session, but just regarding the aspect of local currency, I think small-scale PPPs are fantastic for that because they typically don't involve the foreign currency risk component.
Absolutely. I have a couple of questions, but I don't want to, extend the session. But there's a very good input from the chat box. It's a Carlo from Mexico. In Mexico, we have similar issues and advantages as in France, but also all the other challenges everybody have been mentioning. So maybe Carlo, you can also send some written inputs to us, and we will evaluate and we can use those examples to well understand for the small scale projects in Mexico. And we have a question from the chat box, Mahip Sise, to Doris. Even small scale projects, all projects are not suited for PPP. What about financing municipality projects to be developed under the PPP scheme?
Yeah, that's correct. I mean, not all projects are suited for PPP. That's true for big ones, and that's true for small ones. A project which is suited for PPP is a project where the revenue stream over time is equivalent to the need of expenses for the investment. So that's a very easy calculation to be done. I mean, you forecast the flows of the future revenues, and with a short calculation, very easy, I can put it in the box. You compare it to the amount of investment you need to build the project. So if you do not have that point, forget about it. This is not for PPP, or go and ask for subsidy, go and ask for, descope the project, do something. But if it's not the case, that's the one. Financing municipality project to be developed under PPP scheme, yes, and yes. We have done a lot in France, even in the cultural area, for museum, for tourism centers, and so on. I know a project also in Mali, which is a fantastic one about a zoo that has been structured under a PPP structure and is welcoming now more than 1 million visitors per year. So yeah, I mean, you can go for municipality projects to the extent that it is not, sorry, Ziad, a kind of political delirium, that the project is really needed by the population, that you properly need and have understood the need of the population now, but also for the next generation, because the project will last about for the 15, 25, or sometimes up to 50 future years. So the projects need to be carefully structured so it answers the needs of the population today and tomorrow.
By the way, I have a question to Nayef, to you. I will have a question to you, Nayef, but before, we have a very strong invitation to Ziad, to Brazil. But Natasha should know that this invitation should, include all the panelists and the moderator as well to Brazil. So, Nayef, I have a question, another perspective. I think we didn't talk anything about the developer side for PPP. So I think we should consider the developer roles to attract the banks for the small scale projects. What do you think about it, Naif?
Well, the developers, of course, would depend mainly on like what the PPP unit or the procurement party is delivering and promising and showcasing, you know. It falls upon them. I mean, like, you could have unsolicited proposals coming in, but then the state has to be transferred what they're seeking. And me and Ziad, we know, even in, you know, Ziad had been experienced to like unsolicited proposals. We still have issues about like unsolicited proposals. A lot of places it's still a challenge about like, you know, the fairness, the competition, the way it goes. So if there's no room for unsolicited proposals, it falls upon like how the state is, I would say, for example, addressing this kind of project, you know, and to present it to the market and the public, or like even to the developers to attract them. You know, see, in 2016, I'm just like following up on Doris when she said the zoo project, a PPP is for a zoo project. I've been working on trying to create a PPP zoo project since 2016. Imagine. And the thing is about it, it's the buy-in from the state, because see, there's a lot of factors you got to build around it. The tourism, you got to have high traffic on it. You know, nobody's going to go to a zoo every week or so, you know, so you got to have a guaranteed traffic on it. That's one of the challenges. You talk about like the climate, you talk about like, you know, the accessibility, etc. So that was on, you know, on the procurement party and the state to have it insured and available to make it feasible. Now the developers are not going to walk in and jump in anything till they see like, you know, what the state is promising. There's guarantees, there's commitment that it's part of the state agenda. The state is giving like such kind of like attention to this academic or like this cultural angle or like this, you know, to etc. The developers, of course, I would say they would have to follow. I mean, like, you know, us as a PPP unit, we'd have to follow what like the market is going right now. If they're going for like SDGs, they're going for like diversity, they're going for like, you know, I would say gender equality. You got to take all these kind of things into mentioning, like, you know, how the you know, the impact on the community, the governance of these projects. So it falls upon the PPP unit themselves. We have to work hard, and this is what you know, one of the cases that we see that, you know, when we compare, believe me, for me, it's a lot easier to promote a power station project than, for example, a public library, because have a lot. It has to show and demonstrate the state government, I would say, commitment to support this, which we know, for example, a power plant is just it's a taken need. You know, we need energy at any time of the day. But then a public library at this age right now, when like people just using, you know, like their BC laptops at home, whatsoever, it wouldn't make an impact. And then, like, you know, it's aside from the developers, you know, who's like I say, like, okay, where does this fall between my portfolio of commitments? That even the lenders themselves will be asking, like, what do I get in this? So, you know, it falls into like, you know, the mechanism of how you planning a project. Is this a concession, or this is a pure capacity availability payment, you know, output payment, which falls into this? Mainly, and like from what I've seen in social infrastructure projects, and even like in a small scale, mostly it's like a concession agreement. Usually, it'll give them like, you know, a strip of opportunity for land, say like, you know, go create a strip mall, go create a real estate development project whatsoever, you know, but then it doesn't fall to this kind of complexity. We're trying to diverse from this kind of concession. We try to make it more, I would say, of a more real contractual partnership.
Yeah, thank you, Naif. Doris?
Yeah, I mean, this is very interesting, this question about SMEs, and I'm really going the same side than Naif. I mean, SMEs, they are earning their money from what they sell. This is exactly the principle of PPP. So it means that those guys, they are fully aware of what it means that earning money. And the issue with PPP is that sometimes they are not earning as much money doing PPP compared to not doing PPP. So this is something which public authorities have got to keep in mind. I mean, they need to attract banks, but they need also to attract SMEs. So if you want to have someone doing the project, they need, when they make their balance risk compared to margin, that is positive, otherwise they won't go. And also, most of the SMEs, they have never heard about PPPs. They do not know all about that. So thanks God, WAP is there to promote and explain what it means and what it is. So that's really great. And also there is an issue of cost of development. When they develop a project under a usual traditional procurement process, does not cost that much. I mean, they've got all the files, copy and paste, and that's done. Under PPPs, I mean, you come with legal costs, technical costs, blah, 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 blah. And I've got one of my clients, I told you, I mean, the legal cost will be 100,000 euros. He said, why? I'm usually paying 5. I've done nothing. There is no arbitration. Why should I pay that amount? I've done nothing. And this is an issue. That's why I started with a recommendation, make the documentation easy, short and easy.
Very good. And let me allow to jump to the last question to Ziad to wrap up the webinar. But there is a very good contribution from Patrick Sergent from Africa. He's telling about there are 2 big problems in Africa. The first one is the lack of the reliable feasibility studies for the projects, and the second one is the capacity building problem. So I think these 2 is very important. Thank you, Patrick, for your great contribution. And my last question, I know, Ziad, also you are very active in the digital world, and you are working with blockchain, AI, and those things. And how the bank or how the PPP community can use the digitalization, AI for blockchain solutions, maybe raising additional finance for the small scale projects in the future.
Yeah, I mean, we are at technology. First, before I would like to just add something to what Patrick Sergent said. That is, project development funds are so crucial. And you were asking earlier, what can MDBs do? And of course, MDBs know this. They know that, and they've started trying to develop some project development funds, but I think more needs to be done. They need to see this activity more as grants rather than as lending. Because without project development funds, many countries are not able to develop the PPP projects, especially programs. I mean, programs are going to be even more difficult to develop than individual projects because they need a lot more studying around them. Regarding technology, yes, I mean, technology, of course, can play a very important role nowadays. First, we all know that with AI, a lot of the processes of analysis have been made much easier, much faster. Whether it is analyzing a business opportunity or looking at that location or all kinds of studies that are needed. There's AI can help automate some of the forms and if you have standard documentation, AI can help you even advance farther in that standardization and in filling the forms. Crowdfunding is very important. So a lot of when we're talking about small scale PPPs, I've been involved, not directly, but I know of and visited some very small scale PPP projects. I'm talking about things like solar farms for a village that may cost, $100,000 as a project. And this has been funded with crowdfunding through online effort. The banks have come in and then added, local banks have contributed a little bit more. And then the project became feasible. And because it has local community support, it is a low risk profile. So crowdfunding can play an important role. You have blockchain technology that is becoming more and more understandable by people, because until now, still a lot of people see it as Bitcoin and other things like this. But it is a lot more than that. It is a way to ensuring transparency in transactions, and that can help also make sure that the entire process of lending and repayment and all of that is done in a transparent way. And many communities might not have access to cash. In some countries, payment ability is limited. Some countries are implementing central bank digital currency, CBDCs, maybe not fully there yet, but places like El Salvador have Bitcoin. It's an experiment. It needs to be flushed even more. Yeah, I'm sorry, but to talk for too long, but technology definitely can help.
Naif, any additional?
I mean, like, for example, I've been meeting with the current, like the local ministers recently, and one of them was like pushing for digital transformation. We have a project right now which is related to actually rehabilitation of the fiber optics, the whole network for the whole state. And this falls into supporting the digital transformation, because if you have the proper infrastructure, it moves all along the way. And that's like one of the bases. Currently, right now, I believe that, from small scale projects, it could not, like, because sometimes when we think about like PPPs, typically we think about like assets, we think about like facilities, but actually it could be more than actually services. And I've seen a case in Saudi Arabia about like actually, opening up like the door for like, for recruitment of like, handy workers whatsoever. They establish a platform through a PPP contract where, like, they're dealing with, like, the embassies, they're dealing with these kind of recruiting agencies whatsoever. And it was done on a PPP framework, when they're using all digital transformation into like moving like from paperwork all the way into, like, I would say, connectivity, and making everything, and even like, issuing the salaries, ensuring like, through like electronic means, etc. So there is a lot of ways where like PPPs doesn't have to be assets. It could be services, purely services, using technology, enabling how to see it.
Yeah,
I would like to vote Naif the most diversified PPP expert in the world.
Seeing it, man, I seriously, I was happy about it.
Handicrafts to zoos to slaughterhouses. I mean,
yeah.
I like animals, okay?
Thank you. Doris, would you like to add something?
Oh yeah, I mean, I think that digitalization is key to follow up the performance of the project, definitely. But I mean, there are some limits. By 2 o'clock of the morning, I was finalizing a bit submission, and you see this little object. This is my mouse computer. It just collapsed, and I really felt I was cursed. So take care about the technology, choose quality.
And before wrapping and closing the session, David Dodd remind us very important point as well. Most disaster resilience projects are small scale, and especially hardening existing infrastructure, a huge need. This is invaluable information for anyone wanting to increase resilience and adaptation. So this is also very important. We need more sustainable, resilient, small scale projects. Yeah. From my side, it's maybe covering the issues. The very important one is the crowdfunding. I'm starting from the last crowdfunding, and using the technology and local banks, small banks, whatever we say, but private funds and some and other financial resources. And as Doris mentioned, easy focused on the documentation, the project process. But all we need, I think, the program before the projects. And I think all those inputs lead us finding the right projects. But as Ziad mentioned, I think right projects comes with the real needs of society. So I think this is what I can say at the end from my side, before give to the floor to Ziad to close the session. But I think we need real needs of society, small scale projects to reach the SDGs, ECGs, and for a green, for sustainable, reliable future for our next generation.
Thank you very much, Ayub. Thank you for leading us through this discussion. Really appreciate it. Thank you to Naif and Doris as well for major contributions. Thank you for our audience that has accompanied us. Many of them regulars that are following our program. We really appreciate that. Hopefully we will see you again in 2 weeks' time for another session on small-scale PPPs. And please stay tuned and do communicate with us any ideas that you have. We need your input as we form the basis for the guidelines that we will publish later this year. Thank you very much and see you soon.
Thank you.
You.